Time now for Sectornomics and a look at office space. Dom Chu is here. He joins us with more on that front. Good morning, Dom. How you doing?
Good morning, Becky, Joe Andrews. So despite that push for workers to go back to the office, the stocks of many of these office real estate investment trusts are still feeling a little bit empty right now. The VanEck Vector's Desk ETF, heavily weighted in office REITs, is now 14% below its mid-October highs, as you can kind of see here. Now, SL Green, New York City's biggest landlord, is down roughly 17% in just the past 3 months alone. It is now 22% away from its record highs that we saw back in November. BXP Properties focuses on property in the country's biggest markets. This is the company formerly known as Boston Properties. The company holds space in Boston, of course, Beantown. It's also big in L.A., San Francisco, Seattle as well, Washington, D.C., and New York City. BXP is down about 12.5% in the past 3 months. Brandywine Realty Trust is big in Philadelphia, Washington, D.C., and deep in the heart of Texas, down in Austin. That stock is roughly 10% below over the course of the past 3 months. Now, Vornado, which is another big name in New York City, is down 3% in the last 3 months. Brookfield Properties is global, with space in the U.S., but also in places like China and Germany, India, Brazil, and down under in Australia as well. That stock is relatively flat over the past 3 months. CBRE, especially large in places like L.A. and San Francisco, is up about 7.5% so far this year. Now, one more that we want to call attention to is Easterly Government Properties. They've got a pretty unique story because of all their properties tied to the federal government, not just in Washington, D.C., but throughout America as well. They were hard hit by the Doge threat. That stock is down roughly 20% since the election itself. The CEO has made the case here on CNBC that the stock has been unfairly punished, arguing the company provides leases to essential government services. Now, later on this morning in the 10 a.m. hour, we're going to turn our attention to the all-important data center REITs. They've been a huge focal point, of course, Becky, with the focus on artificial intelligence. We'll see how those trades shape up in 2025. I'll send things back over to you.
Hey, Dom, I wonder how much of the pressure on some of those REIT stocks is related to issues about people maybe coming back to work, maybe not coming back to work, and how much of it is related to just the idea that we're not going to be expecting to see cuts from the Fed and interest rates are higher for longer, and any of the loans that these companies had that they were hoping to roll over may not roll over into quite as of a friendly environment as people had earlier anticipated.
Sure, Becky, and that's a huge point as well, because this idea that, remember, for many of these office REITs and many just REITs in general, they've always been competitive income-producing vehicles for certain investors out there. They are not nearly as big in terms of yield as other parts of the market, at least right now. But if we do see interest rates continue to stay, as you point out, higher for longer, that competitive dynamic of where investors kind of put their money, that becomes a much bigger part of that story as well. If interest rates do start to fall, not only do you see kind of like a pickup in values of some of these real estate companies, but you could also see a little bit more of that competitive disadvantage, right, of being in certain places like in cash as opposed to being in certain other parts of the market. So as we talk about the way that these office REITs operate specifically, those macro dynamics are at play. But a lot of that narrative still focuses on whether or not people will focus on commercial real estate for actually using office space, as opposed to, say, other companies like Prologis that focus on transportation and warehousing, or, of course, the data center REITs, and, of course, Microsoft and some of that news earlier this morning with regard to whether or not they're going to cancel leases. Maybe that factors in as well.